Hello and welcome to Pro Trader Strategies market commentary for Friday, November the 6th, what we used to call on the floor Unenjoyment Friday because it is the non-farm payroll numbers, probably the biggest economic data point we get all month. And let's first talk about across the pond. By the way, I'm Eric Wilkinson. Across the pond, not a whole lot going on really to see there, but here in the United States, one thing we had yesterday was the FOMC meeting. They left interest rates unchanged. Something that was said in the press conference was that Powell said that he doesn't believe that a stimulus package could be too big. What? Oh my God, that sent gold futures rocketing higher, basically meaning we can print as much money as we want and we can create a stimulus package as big as anybody can imagine, to be honest. Okay, so then let's talk about what's going on here in the United States. Well, we got hourly average earnings from the non-farm payrolls number. That came in slightly lower than expected at 0.1%, expected to be 0.2%. Not really following along with some of the wage strength that we've seen in previous data points earlier on this week. So that was a bit of a shocker. I thought it would come at least in line, maybe a little bit better. Non-farm payroll change coming in at 638,000, expected to be 595,000, so 600,000, beating the street there. Also a revision to last month's number, up by almost just better than 10,000 there. So those numbers looking pretty darn good. We also got the unemployment rate dropping from 7.7% to 6.9%. Now that's an unbelievable number. That's actually some of the lowest numbers we've seen, especially during Obama's term. Not necessarily right before the COVID crisis, but really low terms or low unemployment rate in terms of historical numbers there. One other thing to note is what we were talking about last month was that the labor force participation rate dropped off a little bit. Well, it didn't really. It's actually showing back up this month, where there was some labor force showing back up, claiming for unemployment, but the hirings overshot that. So a lot of people getting back. Some of the travel and leisure actually held up very well, so that was a good sign as well. Then also here in the United States, we got wholesale inventories rising a little bit at 0.4%, expected to be negative 0.1%. Now, the wholesale inventories could be ramping up for the holiday season. We've seen the manufacturing sector kick in. They could be starting to stockpile inventories ahead of the holiday seasons. All right, so let's go over to the charts and check out what's going on in the markets. We've got crude oil coming off a little bit. Just could not get above that 39. Now, I've talked about this. The big drawdown that we've seen in crude oil earlier this week, I thought was going to drive us back into the 40 handle. Well, we came up shy of that 2 days in a row, Wednesday and Thursday, both trying to bump up against that 50 Fibonacci, which I was expecting to act a little bit more fluid than a major resistance area, albeit the 50-day moving average is lining up with it, but we also have that point of control right there. So there's a lot of things in and around that $40 a barrel on the levers and pulleys, and it looks like the resistance of the 50-day and the Fibonacci are coming into effect there. That's also lining up with $30 a barrel, which is a psychological, okay, we don't want to go into 40 for the bulls, right? So seeing some weakness here today in crude oil futures. Now let's go take a look at gold futures. We can see here just a massive rally off of the start from go. Basically, we had a better than 50-point rally off of the lows in gold futures to finish very near the highs, and that was basically off of Powell talking and saying, hey, we could probably do a stimulus package as big as you want, and it could probably not be too big. So we'll see where the gold futures, put in the overnight here if I can do that, highlight the overnight so you can see that. All right, so you can see overnight, pretty flat, but yesterday during Powell's speech, that was what really got us rocketing to the upside in gold futures, that he was talking about stimulus packages couldn't be too big. All right, bonds coming off as we are seeing kind of a a normalcy, really, where we saw really good non-farm payrolls number, unemployment number. That would send equities higher, bonds lower as interest rates are expected to move higher, despite the fact of what the FOMC said yesterday, that they were going to keep interest rates suppressed for the long haul. We're seeing bonds, levers and pulleys, the economic data really pushing that market there. All right, Dow Jones Industrial Average is off by about 40 points on the day, creating a bit of a topping pattern here. If we saw this finish just like this, or even a little bit higher, that's going to make it look pretty much like a topping pattern with the candlesticks there. I do expect us to kind of bounce back and forth in and around these points of control like I've talked about, especially with still no new news on the election front at this point. I haven't heard anything new. It's very, very close here in Arizona and in Georgia. I think Georgia's already said that they're going to do a recount. It looks like that might very well be the case here in Arizona as well. We've got the NASDAQ just off by about 23 points, but you can see again near the highs of the day, but creating another type of topping pattern that we could see get confirmed on Monday if we were to kind of finish in and around here or near the highs at this point with the big wick on the candle. Again, you can see here in the E-mini S&P is a big wick, unchanged on the day at this point. But again, a finish up here even at 35, 39, 35, 40, another 40 points higher. That's still going to make this chart pattern look like a bit of a top, especially with the big run that we've had. Now, if I were going to be playing this, I'd probably be looking to buy some puts because the volatility, you can see, has just been sucked out of this market in the last few days as the election results are filtering in here. E-mini S&P is on the breakdown of the daily chart, 30-minute candles. You can see pretty much yesterday, pretty flat. Everybody just waiting to hear any kind of news, and overnight pretty mixed bag for the most part, and day session just not giving us any type of real directionality at this point. Now, I'm talking about those candlestick setups, so we're going to have to watch those into the end of the day to see where they finish out, because today is going to be an important moving day going forward. So we're going to watch these candles to see how they're showing up, and then wait for a confirmation at this point. But near a top, it looks like we're looking to roll over just a little bit here. All right, a couple of things that I'm looking at. I just have a couple of working orders in here. And if you guys remember from way back when we sold off during coronavirus, I got long Coca-Cola at $53 by selling some puts. Now, over this several months, you can see that I've held on to this. It hasn't really gone anywhere. So it's a perfect opportunity to lower overall cost basis on this type of trade. And right now I'm trying to get out of the short puts that I have on. I basically have on a strangle around my longs. So what I've done is I've gone in and sold some November 44 puts in there, and I'm trying to get out of those for 5 cents. It's trading around 20. So I don't really think I'm getting out of those, but I want to have some working orders in there in case it gets very close. Right now, do I want the penny or to the trade? I want the penny on this right now at this point in time, because I'm trying to lower my overall cost basis. And then, like I said, I'm long at 53, right? Outright, but I sold the 52 calls in there and trying to lower my overall cost basis. Those 52 calls I sold for about 40 cents, as well as the 44 puts. So if I can get out of those for about a nickel, I'm lowering my overall cost basis quite dramatically by about 75 cents. Over the course of time that I've had this trade on, it's been lowered by well over $1 and change, probably closer to just at first blush around $2.50 at this point in time. So even if I get those called away from me at 52, I'm overall positive on my P&L in Coca-Cola. But that's what we try to do here while we're trading. You guys all have portfolios out there. Lowering your overall cost basis on a trade like this, where Coca-Cola just really isn't going anywhere, this is giving me an extra dividend aside from the nice dividend they already pay at 40 plus cents, 40 to 50 cents. Throughout that time, I've gotten, $1.44 in dividends straight from the company. And then over that time, it lowered my overall cost basis by over $2.50. So we're just collecting credits on a trade for Coca-Cola as we go along and lowering the overall cost basis on that, increasing our success rate. That's how we do it at Pro Trader Strategies. But something to go over real quick is our disclaimer, so please take a moment to go over that, as there are risks involved in trading. I'm not here to tell you that every trade is going to work out, but what I am here to tell you that over the long haul, you will become more profitable if you are trading according to my guidelines. And that's about it. Check out the disclaimer. Have a great weekend. And if you can't take that, take it easy.